All right, it has started. So, yeah, um, how's it going with your trading?
I mean, pretty good. I've been getting used to the system, so using the Algo Pro, which I've had for a while now, but
Yeah,
using your indicators with it makes it a lot better
yeah.
to hit the entries and exits and those types of things. So yeah, it's working pretty good. At least that one so far.
That's great. That's nice to
Yeah.
hear. Because I've put like quite a time in creating those indicators.
Oh, they're great. Yeah, so
Yeah,
appreciate you sharing them. Yeah,
yeah,
definitely.
that's great. Yeah, so uh, yeah, good to hear that it's working for you. And
Mhm.
also, my main objective is like in this group to like the more people having the similar strategies that I have. So
Mhm. Yeah,
we would be able to like more people getting refined in it into these strategies, and then we'll be able to support each other's on uh, like on different time frames, different pairs. Everybody will have their own
right.
ideas and stuff, and everybody's good at it, and then we'll be able to like have a good system going on, and we can like do a lot of stuff with that. We can like flip accounts with it, do options with it, whatever with it. So everybody's gonna be happy.
Yeah, that would be great.
Yeah,
I'm all for making money. Yeah.
yeah. So that's all about it. And I'm not a big fan on like selling strategies and stuff because I'm like, if I'm making money off my own strategy, right? Like I'm
Right.
making it already on forex and whatever, right? And why do I have to like sell it out there? Of course, I don't
If it
want.
works.
I mean,
Yeah.
if it works, why do I have to sell it? Why don't I just trade
Yeah,
it?
yeah.
Why don't
Yeah,
I
that's what I
trade
mean,
it
right?
trade it myself?
Yeah,
Yeah,
because you could just make money from trading instead. Yep.
yeah. So that's my idea. But of course, I have uh, another thought is that it shouldn't be a lot of people knowing my strategies. Because
Hmm.
if a lot
Yep.
of people are having my own same strategies, right, then too many people will be putting the stop loss on the same place, and the
And then it
broke
wouldn't work anymore,
and then
right?
and then the brokers will be liquidating those stop losses.
Uh, okay. Yep.
Yeah. So
Yeah, we don't want that.
yeah. So it cannot be like too published. So I'm like putting an invite only group and like
Hmm.
kind of get like small special force kind of elite team.
Yeah, man. I'm
Yeah.
all for that.
Yeah.
That's a good idea.
Yeah, that's enough. I mean, that's enough for me. I don't need like a lot of people knowing this thing.
Yeah.
Yeah. So, uh, I want to share this supply and demand
Mhm.
strategy. So, let's get in with it. You have basic concepts on support and resistance and supply demand, right?
Yep. Yep.
So then it will be quite easy. So first, what I do when I do these supply and demand strategies, um, I want to do this for other people too. So I'm gonna go through
Hmm.
some basics for because it's recorded, right? So I'm gonna draw some support and resistance first. Like how do I do the whole process?
Right. Okay.
So first I go to 4 hours and then I pull up my support and resistance. Uh, what is this line called? Horizontal line. And then I start drawing support and resistance. I draw it on places where there are like more hitting points, like one, two, three, like these kind
Right.
of. So I first make it like white color because it's on higher time frame, and then on
Hmm.
lower time frame I make it like other colors, maybe green or red.
Okay.
So
Yep.
so first of all, I will draw all these the major uh, hit points. It'll be especially these kind of zones, like at least hit twice kind of
Hmm.
zones, and then like here, and then like these have been hit a few times, like one, two, three in here,
Right.
and then like yeah, this one like hit it multiple times. Like you have to find these things yourself you need to have a good eye for that.
Hmm.
It's basically the more you practice, the more you will do. You will be good at it. So if anyone got time, their spare time, they should spend more time on like finding different charts and just try drawing support and resistance on it and supply and demands on it. That way you'll be helping your strategy in your long term.
Yeah.
Yeah. So once I draw this right, I then go to like 1 hour time frame and double check it if I need to make any more. Normally I don't have to because 4 hour time frame is the best for gold specifically. And then what I'll do is I'll go to 15-minute time frame and then I'll draw smaller ones. At this time, I'm going to change the colors. So basically, if I see like multiple hit points, like 1, 2, 3, 4, right,
Hmm.
I'll draw it there. And this time, I'm going to choose like green color or red color, something like that. Let's see other ones. Okay. Uh, for example, yeah, these levels. So it's working in there. Here. Yeah, it's working. And I like to go back in time and start drawing my support and resistance from there. Like for example, from here or here.
Yeah.
So it makes more sense uh, because those will be more respected in the ones that are more respected in the future. Those are the ones that you have to look out for. Um, let's draw these. Okay, and minute these. See, yeah, this one. And this works. Wait, a little higher. Yeah, here. So let's see where the price is. Price is at 2039 now. So let's draw some lower ones. Here. Yeah, this one. And yep, these. Okay. So price above and below there are all support resistance there. Alright. Now we have drawn the support resistance and we are on 15-minute time frame already. We just need to draw um, supply and demand, and we will draw that with the rectangle. So how we do that, what I do is like, first of all, I will use my JSON indicator. I will go on 30-minute time frame. So,
Okay.
so first what I do is like, I see if the market is trending or not. Like if market is already trending, I wouldn't use supply and demand that much. I can still use it, but I will not use it. Uh, I will also teach how to use it in trending market, but let's focus on ranging market right now first, because most people will be using this, and then once they see market is ranging, that this trending indicator will not work in ranging markets, and then they will
Hmm.
have to shift. So right now, uh, market is trending, and then you see market is still trending, and you see one-time inconsistency, and then you see it's still trending, still trending, still trending. One-time inconsistency of market, like inconsistency such as price went up and went down and broke through the uh, very close stop loss that's near to like opening, and then
Right.
another times, two times is enough already, and then you should already like starting from here, you should already be like focusing on supply and demand zone strategies. So once we are here, right, we saw like two-time inconsistencies. We will start. Let's go to one and here. Okay. From here on forward, we'll be using supply and demand zones. So from here on forward, we won't be using JSON indicator, and we will start using supply and demand zones. Okay, how we draw supply and demand zones? There are few rules to follow. Okay, I'll make this as simple as possible. The first rule to follow is like the supply and demand zones are only they are only zones where a price like do a V recovery. Okay, this one is a V recovery or this one is a V drop. Okay,
Mhm.
wherever the price did the biggest V drop or recovery from, there will be our supply and demand zone. Okay, so for example, in here, price did once, right? This is one of the supply zones, sorry, demand zones. And how would we draw that? We would draw it on 15-minute time frame. So right now we are on 15-minute time frame. So how do I draw it? I go to the last two candles. I mean, like this one is the one at the bottom, right? I'll start from there, and then the candle above it. Okay, and I will put my rectangle over there. Okay, so my rectangle is only covering the most bottom and the second last candle. So I will start dragging the uh, my rectangle from there and as far as possible. Okay, so price went up from here. Okay, and before here it dropped from here, right? So what we would do is like we would start placing a rectangle from here to here, and there is covering two candles, right? We would
Mhm.
drag it from there, and once price hit this area, right? This is the take profit zone already. So how would we enter this trade from here? Is like once the price close out of this rectangle, we would place our long position in here. So it would be in here, okay? And our stop loss would be the bottom of uh, the the last wick, okay? The last within the rectangle, or sometimes it's out of rectangle on second drops or whatever. So this will be our entry, and the previous V drop area, the rectangle's end, will be our take profit area. Okay, this is how I normally do it. So we will enter in here, let the price do its all thing. Okay, and once the price hits this area, should be in here or maybe in here, then we would hit our stop loss already. No, take profit already. Okay, and this is 1 to almost 4.5 ratio, risk to reward ratio. Um, let's not focus on risk to reward ratio first, but I mean that's the main reason why we are playing with supply and demand zone. Let me get more into how to actually use this strategy. So now the price that have gone hit here, right? And normally what I would do is like uh, wait for the price to drop back out of it. Once it's closed out of it, right? If the price have, for example, if it was in here, in this area, and there was no all the area out after it. Wait a minute. Like for example, we are in here, okay? If the price came back down and closed uh, out of this rectangle below it in 15-minute time frame, I would open a short position in here, for example, and then I would put my stop loss on the last wick that was above it, okay? Then I would put my take profit in here, okay? But what happened is that price didn't came down, it went higher, okay? Forward, forward, forward. It went higher and higher and higher. So this, I could also trade this for long. I could also go long in here. Normally you could. Um, but I like to be more confirmed, so I normally do what I do is like I wait for it to give me a reversal signal. How I do that is I wait for it to break its neckline. What is a neckline? Neckline is something like you see this big candle, right?
Hmm. Yeah.
Only big candle counts on necklines is that um, this is the neckline of this big candle. If price closed below it, it broke its neckline. Okay, here it broke its neckline, but it was within the rectangle, so I don't count it. But now it's outside, right? It's something else now. So this would be the neckline. Price went above. Okay, here it was bigger candle, so I would put a neckline in here. It didn't break it yet. Okay, and price is ranging, and then it made a more higher high neckline, higher high neckline, okay, and higher high and neckline. It broke it, okay. I would have uh, got a short in here, and I would have hit my stop loss, okay. It's okay, it's a small stop loss, but now the neckline is here, okay. I would wait for price to see what it does. And the second thing out of the neckline is I see this big candle. This big candle is like a candle that have a big wick behind it, a big tail, and then
Right.
below it there's like a whole big square, and there's no. It's not like this one that have a big another big wick below it. There's no big wick below it. It just looks like this. Okay, the wick is only to the upside. What I would do is like I will take this as a signal, but I will not open a position yet. I will wait for it to break a neckline. This is the first signal for me, and then there's another one will be price closing below it. So I would open a short position in here. Normally this is what I do. And I would put my stop loss in here. If it's too far right, I would just put it in here. Okay, because I want good risk to reward ratio, right? Because
Mm.
normally if it does this candle, right, and it breaks below neckline, it shouldn't come back up, you know. It shouldn't. Once there are two confirmation, it shouldn't come back up. If it does, right, it was a bad I mean, it was a bad opening, whatever, okay. It happens sometimes, it doesn't happen always. But this should be enough as a stop loss. As a take profit, this one is also enough because price did went down in here, did a V recovery from here, right? This could also work as a take profit. Or if you want to be more conservative, price did a drop in here, did a V shape from here. Okay, you can also take a profit in this area. Okay, these are one ways to take the profits. The other way is my favorite one is that I like to look at uh, two lines below, okay, which is more consistent, like one support resistance line and the second one. Okay, I would take profit in here. So this is what is my personally favorite one because it's more consistent. Usually gives me around 150 pips or something like that normally. Maybe not in this situation. It's like from 2031 to 2023, maybe only like uh, yeah, way less pips, maybe 9 or whatever. So, but normally it does good. So let's see how this goes. Price drop, 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 hit my stop loss, but I will expect it at least to come down here, at least. I mean, hit my take profit, that's what I mean. So it ranges for a while. So, for example, if it ranges right, and um, you should draw this once again, for for it might come back in future for this place. And every time when you see like these big drops, right, already in the price and price goes below your first support resistance zone, you should always put uh, stop loss at the break even, and that's
Right.
yeah, that's the most. best risk management that you can have. So let price do its thing. Let's see how it goes. So price hit this area already, okay, and you would have hit your take profit. And looks like price is trying to do a V recovery from here. And what I would do is I would draw this two candles, right? Okay, yeah. And price came out of it. And the good thing is that it came back down to test it. You can open a trade in here. If if you if you're late, it would have been a good thing at this situation only. But normally, let's don't talk about late. Let's talk about situation where you got in here. Okay, on this candle, and your take profit zone would be, um, let's say in here, because price did a V recovery from here. This would be more safe for you to take profit in here. If you're talking about safe, this will be much safer. So let's see how it goes. Price hit stop loss. Okay, and you can enter once again. Okay, price hit your take profit this time. And let's see how it performs afterwards. Okay, V drop right away. Now, the second rule that I wanted to tell you that price only respects supply and demand zones once. Okay, once this has been invalid, right? Once this has been used, you shouldn't use it again. You should use
Oh,
the new one now. Okay, this would be the new one now. Okay, and this has been used once already, so this is not the new one now. Okay, the new one would be the one that you draw once again, where the price did a V recovery. So let's say it was in here, two candles. Yeah, one and second one is in here. Yeah. So, but the range becomes smaller and smaller because that um, there's a flag pattern going on sometime. Like on higher time frame, you will see a flag pattern going on. So that's why the price ranges smaller and smaller between the time
right.
that goes on. So let's see how it goes. So it broke below it. So it broke below the flag pattern. And if you wanted to open a short in here, right, you would place a stop loss in here on this wick, which would be enough because this would be the wick that's out, the first wick that's out of the supply and demand zone. And here, if you short from here, right, your take profit would be like, if you remember, I said one and a second supply and demand zone area, which would be somewhere in here. Yeah. So wait a minute. Okay. Yeah, I forgot about drawing it in here. Yeah. One and two. And if you open it in here, right, you could also go for here. One and two. This one, 2009. And normally it would hit there. But let's see. Okay, price reversed. You hit your stop loss. And it's going back up. You would open a trade in here, put your stop loss in here. It can be in here if you open with this uh, in this area, but it wasn't out of the rectangle yet. It isn't out of the rectangle yet. So you would open it in here, and you can still put your stop loss in here. Why not put your stop loss in here? Because like the market is becoming tighter and tighter in here,
Oh,
and
okay.
you don't want to have bad risk reward ratio. And the second reason is that this candle. It's just is similar to this candle. Okay, but it's just in reverse. It's just in reverse, and this time the wick is down, and the whole box is on the upside. So normally this is very bullish, but let's see how it goes. Wait, let's see. Do we hit our stop loss yet? Not yet. Okay, we hit our stop loss. Let's see how price behaves. Um, we need to remove the old support and resistance. No, supply and demand zones. And price is just ranging in this area on even on very small time frame. Wait a minute. Okay, we got a confirmation. Um, Price came out of it. We'll put our entry in here and stop loss in here and take profit in here. Okay, see this. It's becoming really, really tighter. Okay, we hit our take profit and this price do its own thing. Price came out of it. Okay, it's playing games now. Um, you see this big candle now? It's just like this one once again. Okay, and it did hit this supply and demand zones. Okay, previously, if we would have opened a trade in here, right, and or even in here, if you would have aimed for here, right, and not just here, we would have went all the way to up. And if we put our stop loss in here, right, we wouldn't hit our stop loss and we would hit this area already. But it depends on what are you aiming for and like what's your target. Like your target is in here, your stop loss should be smaller, and then your chance of hitting your stop loss would be higher because your stop loss is tight. But if your target was here, your stop loss should be in here. Okay, um, it will take time to go up there, and uh, if you hit your stop loss from there, your loss would be big. But in these situations, if you would have been targeting in here and hitting your big stop loss, you would have normally half in your lot size in here and let it drive all the way up. Because if you've halved it, if you've hit your stop loss, you wouldn't lose that much. This is one of the ways to trade it. So here you take a short, okay, and um, like for example in here, price close below in here, you take a short, put a stop loss in here, and let the price drive to, wait a minute, remove this, and let the price drive to where V recovery happened. Okay, take profit in here. Yeah, let's tighten our stop loss. Okay, we hit our take profit already. And if you put um, your break even at if you've put your stop loss at break even, right, you would have hit your break even already in here. And it's a good risk management. Uh, and this you wouldn't take it as a second chance. You would have let this trade slide, okay?
Mm.
But if you've opened your position and like you didn't care about it at all, and like you've seen uh, you if you would have like not take not like aim for this area, but aim for um, my usual way of doing is like two support two support resistance line in here. You would have still gotten into profit without uh, caring so much on manually closing trades and stuff like that. This is how I normally trade it. Okay. Um, uh, you get the basic idea, right?
Yeah, makes sense.
Yeah. So price does all these things and it ranges. And the other thing is that a price would range, and like for example, if it's ranging in this area, right, and you put a big rectangle on it like this, and then you drag it. Once price breaks out of this rectangle, normally the trend, the ranging is will be over by then. Like let's see in here, price ranging. Okay, came out of it, but it went back in, right? You can still take a long in here. This long is usually very strong, okay, once it breaks out of this range, right? This long is usually very strong, and because previously when it drops down, right, the drop is also strong. But this is how market works. Once it goes up high, it uh, and it comes down strong, right? It likes to come back up high again. So you can take a long in here with usual uh, our usual way of doing it, and you can aim for this area where the price started dropping, and it will be usually good. Okay, it hit stop loss. So we will widen our rectangle zone. Price is still ranging, and it broke out of it.
Hmm.
Let's see if it breaks out of it again, then market will be ranging to the upside. Yeah, so
Yeah.
market starts ranging. No, no, market starts trending, I mean, to the upside. So this is how it works. This rectangle thing can be also on like lower areas like these, right, like this. Yeah, sorry, this. Yeah, like market breaks out of it, it uh, ranges below it, not inside it, and like it did came back here, right? And once it broke out of this range, it started trending already. Even though it still came back into previous ranging area, but it was actually ranging from here on.
Hmm.
No,
Yep.
actually trending from here on.
Trending.
Yeah, yeah. So this is what happens. Like once it breaks out of its ranging zones, it starts trending. Not immediately, but this is what it aims to do. This is usually just uh, bankers or big players. They are trying to do the last good. Hello, hello. Can you hear me?
Yep, I can hear you.
Yeah. This is the area where they do their last good buying, and then from here on, um, they make all their profit. So that's how it all works.
Right.
So, yeah, this is how it works uh, with this trending indicator in ranging market. Let's talk a little bit about how to take advantage of trending market on 15-minute time frame. We got only a few minutes left, so I'm going to make this very quick.
Hmm.
Um, Trending market is very basically very simple. It's like, for example, we have a higher high, higher low, right? And normally, not this one, but normally like this, higher high, higher low. The previous high can do as a support resistance zone, and once it touches this area, we can take a new buy from here. Okay, once it once we did a new buy from here and price goes back up, we want to get in again. We would do onto the second one, okay, or the other ones after it. Like for example, even if we did it from here, right, and price came back in, came back out, this would be a good buy normally. This is how it's normally done in trending market. Even in here, price did a V recovery from here, price got back in, okay, went up, got back in. This time we would have hit our stop loss if we've got in after it. But then we've hit once, we would have hit stop loss once. We would get enter in here again. In here, candle's too big. Yeah, and we get in, put our stop loss in here, let it drive once again to maybe this area or this area. This area would be because uh, price was here. Price started dropping from here, so we would have take this as a take profit, or we would just use our normal like 1 and 2 support and resistance zones to take our profit. So this is what happens. Let's see some down trending. Downtrending would be similar. Price did a drop here and like um, lower low, lower high, right? We will do it on a lower low. Okay, previous lower low, and then once the price break through it and it comes back up to our previous lower low area, right? We would enter a new position from here. So this is how we do it: previous lower low, let price come back up, and then go through it. This is how you trade it with supply and demand zone strategy. So yeah, that's basically it.
Yeah, looks good.
Yep.
So when you're trading on the 15-minute, do you ever leave your positions on overnight or do you close them all out for
I
like the day?
I leave it overnight, but I don't
Okay.
leave it for the weekend. Never leave it for the weekend.
Right. Okay.
And sometimes if I let it open on um, NFP or whatever events, big news events, if the stop loss is not too far, if like the
Mm,
trade, if like the trade is this good, like this kind of good, right? This kind of risk reward, I will let it open. I will take the loss if it goes through losing, you know.
right.
But
Okay.
if it's something like this, and then this, no, I will not trade this in news events. I will skip this one. So
Okay.
this is my strategy.
Yeah, that looks good.
Yeah. So last time
Well, I mean,
yeah, yeah. What do
I'm
you?
sorry, go ahead.
No, no, no. Say it, say it.
No, I was just gonna say, like from the results you're posting in
Mm,
the Telegram group, what seems
yeah,
to be working. So
yeah.
it's looking good.
It is working especially because last time it was very support and resistance. Last week it was very support and supply and demand friendly. Yeah, so that's why. Sometimes it's trending, then I have to change my strategy. But
Right.
it all comes with like repetition and experience.
Yeah.
Yeah, man, that's all. So
Awesome. I appreciate it.
yeah, man, have a good day.
Yeah,
Our
you too.
time is up. Yeah, speak again.
Okay, we'll talk later.
All
Yeah,
right, goodbye.
thanks. Take care.
Bye bye.